How come silver prices collapsed again? Bitcoin and silver are just bottomless pits right now. Bitcoin tanked from 100K down to 60K, and it's still dropping. Same with silver, it fell from like 120 down to 70, and it's still going down. Why does silver always lag on the way up but crash first? And why is it always a sudden collapse style crash? Why? It's because of what I call the capital market. All capital markets originate from casinos, all of them. And don't give me that look. Don't act all high and mighty saying, oh, Bitcoin is different. No, everything. What do I mean by everything? All capital projects, whether it is Bitcoin, crypto, gold, silver, oil, stocks, bonds, they all come from the casino. The casino is the root. But traditional casinos have four major limitations that make them totally different from the modern financial industry. It's like the difference between humans before they invented tools and humans after worlds apart. So what are the four limitations of a traditional casino? The first limitation is the number of players. Traditional gambling has a head count limit. Like bridge or Mahjong, you can only have 4 people, right? That's a traditional casino. You can't have a massive crowd playing together. A table is usually 2 to 4 people. So you're limited by the number of people, meaning the pot can't get that big. The second limitation is that it breeds hatred. Why? Because if we're playing Mahjong and you win, that means the other 3 lost. Those 3 people hate your guts. The loser won't want to play next time. They'll be cursing you while wearing red underwear before jumping off a building because they hate you. They know exactly who took their money. The third limitation is that the rich and the poor can't play together. You're limited by economic power or financial strength. For example, I can't gamble with the delivery guy who watches my channel. Why? Because I have way more money than him. If I want to buy the dip on gold, I feel like I need to drop at least $50,000 to make it fun. But him, he's got maybe 50 RMB. We can't play. How am I supposed to play with 50 bucks? It's like Mahjong. I can't play with my grandma because she plays for pennies. What's the point of playing all night to win 10 or 20 bucks? It's boring. The fourth limitation is the skill gap. Traditional games have strict skill requirements. If our levels are different, we can't play. If your hands are fast and your brain is fast and I play against you, I'm just getting slaughtered. So these are the reasons why traditional casinos couldn't evolve. But then came the Wall Street era, the Buttonwood Agreement era, the 1783 Dutch tulip era, and things evolve. The biggest sign of this evolution was the appearance of the house. The dealer, the house appeared. Traditional gambling didn't really have a house. In Mahjong, the East player isn't the house. What is a house? The house sets the title and rules of the game, has the obligation to organize the gambling, and handles the settlement. That is the house. Once the house exists, everyone else is betting against the house. This is the start of the financial market. The financial market opens for business. The house has basic duties. You're saying, Old Wang, this sounds like Italian soccer betting. You're absolutely right. Italian soccer betting is a typical modern financial market. No limit on the number of players. Today, AC Milan plays Inter Milan. Anyone interested or who disagrees on the outcome can join in. 100,000 people, 1 million people, doesn't matter. The house sets the odds, and you bet on whoever you think will win. No headcount limit. No limit on scale, money. There's no rich versus poor issue anymore. You're a billionaire. Great. Buy more. You're a worker. Buy less. No skill limit. And practically no limit on, well, no revenge. You don't need revenge. You accept the loss. Who won your money? You don't know. You just know you lost the bet. You put your chips in, they open the box, and damn, it's gone. I bet wrong. You won't hate a specific person and say, you took my money. So this is the evolution into a capital market. It's finance. So sports betting, lotteries, numbers games, these all have a house. So take it a step further. Commodities exchanges, stock exchanges, Bitcoin exchanges, they all have a house. Take gold, for example. Gold has 5 major market makers, 5 big houses internationally. And they are essentially one group. No Chinese people involved, by the way, before the Indians showed up. Diamonds had big market makers too, about 20 of them. They set the international price. You have no choice. You either play or you don't. So if the international gold market has 5 big market makers, does the silver market? Of course, silver has a house too. That's why when gold rises, silver follows. Same logic, everyone comes to hype it up and buy. But why does silver crash so hard? Why do they have to crash it until you are dead? Because the silver house can't handle it anymore. Gold trading has almost zero demand for physical delivery. Except for the Shanghai Gold Exchange, international gold markets are basically paper games. The pressure is low. But the international silver market is different. Silver is used by China, used by the US, it's an industrial raw material. It's a commodity. If you guys hype it up and buy so many long positions, the so-called Chicago Futures Group Comic Cinemex cannot deliver the physical silver. You have forced the house to play dirty. In other words, I am the house. I say AC Milan will win tonight, and I open the betting. But then everyone buys AC Milan to win. If they actually win, I lose my pants. so AC Milan must lose tonight. If AC Milan wins and all the gamblers in the world bet right, I'm bankrupt. Get it? It's very simple. You ask, how can they predict it precisely? The house doesn't need precise prediction. They just follow the law of large numbers. The Gaussian bell curve. The house only needs to capture the middle 80%. They don't care about the 20% on the edges, because most people will cluster in that middle area. The house just takes a net and scoops up that 80%. They won't lose. But what are they afraid of? Special situations. The bell curve holds up as long as there are no anomalies. If a special situation occurs, the curve collapses. Right now, everyone rushing to buy silver is a special situation. It's like, why is nobody playing by the house's rules anymore? The volume of long positions you guys bought, especially the Asian markets, has created a demand for physical delivery that exceeds COMEX's inventory. This has happened in history before. It happened in 1981, January 1981. Why? Back then it wasn't the Chinese, it was the Hunt brothers. They were the richest men in America at the time. Same situation as today. I'm buying silver, and I'll buy until you're dead. Finally, they forced the Federal Reserve to step into the ring. Because the Hunts were so rich, Texas billionaires, they forced Fed Chairman Volcker to announce interest rate hikes. The dollar entered a rate hike cycle, just like the Fed Chairman announcing balance sheet reduction today. Hiking rates and shrinking the balance sheet have the same effect. He announced, I'm shrinking the balance sheet long term, I'm hiking rates, and I am going to beat you. If they don't beat you, Colorado Mex goes under. If COMEX goes under, the financing banks behind the market makers go bankrupt. How many US banks are involved in silver market making? At least 2 of the big commercial banks you see on the streets of America couldn't survive it. So they will beat you until you are dead. They will beat you until you doubt reality just to force a short squeeze, or rather a long squeeze to deleverage you. They have to crush the leverage of the longs to keep the exchange running, otherwise the casino collapses. And they have to pack up and run. That is why silver rises last but crashes first, and crashes so hard. That is the true macro logic. The details, the sequence, the specific people might change, but the big picture is this. Don't give me that other crap about, oh, the silver bull market is gone forever. Dumbass, how can you say something so stupid? Watch once they wash everyone out. It'll rise again. Of course, gold will rise first. Then silver, the enthusiasm for silver investment, especially from Asian investors, is like a dick. It gets hard at the slightest provocation. Why? Because the US dollar gets soft at the slightest provocation. It's relative. This is the new problem COMEX is facing. It's a problem that comes in such slow cycles that people think it's new. What is it? Every few decades, US national power faces a strong challenge. The last big gold is silver bull market and weak dollar happened because the Soviet Union challenged the US. In the 70s and 80s, at the peak of the Cold War, the USSR was rising. Their military power actually surpassed the US. They had more nukes and better deployment. The US had just lost the Vietnam War and looked terrible. The president couldn't handle it and got kicked out. So, in the 70s, the dollar was very weak. Of course, then Reagan came in and worked the Soviet Union to death with the Star Wars program. But that was 10 years later. So, every time the US faces a world-class challenge to its global order, the dollar gets soft and gold gets hard. And naturally, gold gets hard first. Then silver thinks, I can do it too, and it stands up, and then, wham, its legs get broken. Haha, legs broken. Last time gold got its legs broken too for 20 years. From the 80s until 2004. In 2004, when we were in Beijing, we wrote the China Gold White Paper. It said gold was about to enter a century-long bull market. We wrote that in 2004. Why? Because we saw the rise of China if the East rises and the West falls. And China keeps rising, China will eventually become a real challenge to the US. And if everything is made in China, eventually wealthy Chinese people will realize investing in real gold and silver is more reliable than investing in US debt.